Welcome, everyone, to the Information's TITV. My name is Akash Pasricha. It is Friday, September 26th, and we have got a packed show for you today, exclusively with our own newsroom. We have got a great profile of Mira Murati, the former CTO of OpenAI, that I cannot wait to talk about with our AI reporter, Stephanie Palazzolo. We're also going to bring on our advertising reporter who has been covering the Google ad tech trial this week in Virginia at the courthouse. And we're going to be talking later on to our electric vehicles correspondent, Steve Levine, about a big story that he had this week. But I want to start with the big news out of TikTok. There was officially a deal for TikTok US in place announced yesterday. The White House signed an executive order approving a deal that will see TikTok's US business sold off for $14 billion. Any way you look at it, that is not a particularly high number, but just as interesting is who is getting involved in the deal. I want to bring on our Deputy Bureau Chief of Venture Capital, Katie Roof, to tell us more about what she's learned. Katie, welcome back to the show. It's great to have you.
Great to be here.
So let's talk about the $14 billion figure. Were you surprised by that? I mean, I was shocked.
Absolutely. It seemed like the decimal point was maybe in the wrong place. People thought this was valued at like 400 billion at one point, and so 14 doesn't look similar to that. But as someone pointed out, there was one point when we thought it could go to zero because China threatened to shut it down, and so ultimately, because of the national security concerns, it put China in a position where they had to sell at a very steep discount.
Right. And Martin Pierce, our co-executive editor, he wrote a column last night in the briefing talking about the valuation. We've reported at the Information that ByteDance's international revenue in the year 2024 was $39 billion. And, if you take the international revenue and you kind of assume that, okay, most of that comes probably from TikTok in the US, call it $30 billion in revenue. I mean, this is not even one time's revenue. I mean, this is tiny. But then we got news this morning from Bloomberg that there could be a profit-sharing agreement in place. And so maybe this is more complicated than we thought.
Yeah, it seems like a lot of the details are still being hashed out, and who's owning what percentage and getting what board seat. It does sound like China and Chinese shareholders will still own part of the business, but they will not have a majority stake, and that Oracle or a US entity will be controlling the security issues. So, but yeah, there's still a lot. I've talked to people involved who don't even seem to know what's happening because the news keeps changing on this and has been changing for 5 years. I've been looking into this situation since 2020, and it's always been changing and speculative, but now it seems like things are finally happening.
Right. I want to go back to what you were talking about earlier, which is that at one point, $0 was a possible price tag in the mix. Why couldn't ByteDance get a higher price in this? Who do you think had the leverage here?
Well, I think that the U.S. government deliberately timed this during negotiations with tariffs. And so, maybe one party's willing to negotiate at a discount on one issue if they can get a better deal on the other issue. And so that just probably gave the U.S. government more leverage.
In other words, there's a broader plan. The delay. I mean, it's delay until the time is right, and then strike seems to be part of the calculus here. I want to talk about MGX, which was the latest name added into the mix in terms of who could own the entity. Tell us a little bit about MGX, and also, did it surprise you that they were taking a stake here in the new entity?
Well, yeah, it's surprising in the sense that they are an international party. And so if this is about, America first in theory, you wouldn't expect the major shareholders to be international. But then on the other hand, it's not surprising in the sense that MGX is getting very involved in a lot of things. They can write big checks. They're in the UAE, which has really warmed up to the West and has, is on good terms with the United States. So I think maybe that's why they were allowed in the mix.
What happens to the existing shareholders in ByteDance?
That's the big question. What a roller coaster it's been. I've been covering ByteDance since it was Musically. It was, it used to be this popular app for young people who wanted to sing and dance, and then it turned into TikTok. And a lot of the shareholders have been in it that long, where Musically sold to ByteDance, and it turned into what it is now. And so, first their investment went up and up and up, and then it was, they thought it would shut down. Now maybe it's worth 14 billion, and they might have the option to buy more shares. So certainly not where they thought it was at one point, but the story with TikTok's not over.
Right, right. And an option to buy new shares. What do we know about that?
Yeah, so the information is reported that existing shareholders should be given an option to buy more shares. We have yet to see who's planning to, who's going to take up that offer and what the conditions are. But it sounds like there will be an opportunity to buy more.
And then the question would be also what valuation they would buy the shares at, I guess, which is kind of an interesting question here. Before we let you go, I do want to ask you, about sort of the story being in the developing phase right now. We saw the executive order last night. Okay, it seems like things keep changing. Is this the deal, or what could you see still change? What's still in flux? What questions are there still?
I think that some of the stakes have been reported, but some of the ownership stakes haven't. Um, you know, I'd like to know who's going to be the chairman of the board. I'd like to know the details on how Oracle will be controlling the security. If China's still a large shareholder, are they going to have a lot of influence still?
Right.
There's a lot of questions that haven't been answered.
Right. Great. Well, Katie, thank you so much for coming on and sharing that with us, that analysis. I'm sure that you're going to be making some more calls today, and so maybe we'll bring you back on next week to hear about what you learned. That is Katie Roof, our Deputy Bureau Chief at The Information. Okay, well, this week, Google is in court once again to decide how it will resolve the issue of part of its ad tech business being deemed a monopoly. I want to bring on our tireless advertising reporter, Catherine Perloff, who has been on a marathon reporting trip covering the trial on site at the courthouse to break down everything that she has learned and where she's expecting where she's expecting things to go from here. Catherine, welcome back to the show. It's great to have you.
Hello.
So it's been a tiring week. Gosh, you've been in court all week.
Yeah, and you can't have your phone in this court, so you're writing by hand. So you're
Well,
like
it
back
must be
in
kind of
school.
nice, right? I mean, you get to disconnect a little bit with all of
Yeah,
the nitty gritty of ad tech law in front of you.
that's true, and not get notifications from work for better or worse. So yeah,
Okay, let's get into it because it's kind of a complicated one. I want to sort of try to keep this as high level as possible. Just very quickly, remind us. So Google's ad tech business, this is a part of the ad tech business that helps publishers, websites sell their advertisements online. Just a quick recap. The judge ruled that part of the business had a monopoly, and now we are in court again to try to figure out what the correct punishment should be for Google. And so these are arguments going back and forth about what is fair. Talk to us about what we learned this week from all the arguments in court.
yeah. Well, the government is pushing for a breakup. They want Google to have to sell the part of the business the judge deemed a monopoly, which specifically are Google's tools for publishers, so for the sell side to sell ads on their sites, and not the buy side ad tech tools. And the government is, or sorry, and then Google is arguing that that will not be necessary, and that they have a set of behavioral remedies that will sort of remove some of the concerns the judge had about the fact that they're linking these two businesses together and making it hard to use one of their products without using another one of their products. And
Hmm.
they say that's sufficient. And also, we just had a ruling in another antitrust case against Google, where a judge decided that a breakup was overreach. And I think they're trying to get some points on that as well.
And so, just to remind people, putting this into perspective, the decision out of the first case, I guess, where they had the remedies trial, was that Google should not have to sell Chrome, essentially. I think going into this one, a lot of people thought, hey, a sale of the ad tech business could be more likely.
Yeah.
As the week has progressed on, has it felt like that is going to be the case? I mean, what has the judge said about how they're thinking about this?
I do think it's definitely more likely. It felt like, especially because actually earlier this month in Europe, there was a similar decision about the ad tech business, and they haven't fully said what they want to do, but they said they would like to break it up. So, there's a lot of pressure on this. But the judge, we don't know exactly what she's thinking. But yeah, it's just her making the decision. There's no jury. So what she says in court, is always pretty valuable. A couple interesting things she said. First, she sort of pointed out that, what if the remedies that the government is suggesting increase competition, but the overall market that this is concerned with, which is ads on websites, declines. And that, that's kind of been happening a little bit. Like, the market for people are spending less money on advertising on the web versus on streaming or versus in social platforms and app. And I think,
And so this the idea. This is sort of a similar idea, I guess, that came up in the last case, which is that AI has changed the game a bit, and that the market for selling ads is shrinking. And so why would you try to stifle that market, essentially?
Yeah, exactly. The market forces are going to regulate itself. And so that's sort of an argument Google's been trying to make. And the judge's question, which is like, competition could increase, but the market could go down. And, maybe a breakup makes this worse, because if Google's not investing in this market as much, maybe they're going to prefer other channels, which is an argument Google is making. We don't know really what will happen. She seemed to ask about, so that kind of struck a chord with her. Another thing she said during the trial was, like, she asked if, what if instead of selling these businesses, one of the products in question, what if we just shut it down? And instead, publishers could use sort of an open source solution that is popular right now. I'm not going to get into all the weeds there, because it's a very complicated case, but just kind of interesting that shows that the judge seems to be questioning the feasibility and being very careful about whether a sale is really the right option, and even coming up on the stand with creative solutions that we haven't really thought of yet. So,
well, and I think that's interesting, because that is sort of what we saw a little bit in the last case with the search related case that surprised people, was that they were actually sort of acknowledging that, hey, this, the game has changed a little bit since this case first began. I want to talk to you about sort of the feasibility of actually selling this part of the business at all. You wrote a brief last night for us talking about some of the history that Google had actually tried doing this before. What did we learn about that?
Yeah, the technical feasibility is a really big issue in this case, because I think Google wants to argue that, their ad tech is too connected to their other, tech systems, their other infrastructures, so it'd be impossible to spin out. But on the stand, a Google VP of ads testified, that they had previously, both in 2023 and 2024 and earlier around 2021, had looked at how they might spin this out. The key difference, at least in their most recent effort to think about a sale and what the government is proposing, is that Google would have sold the contracts and the business part, but not the underlying technology.
Got it.
They would give a sort of guide for whoever the buyer would be to recreate it, but they would sell the underlying source code. And the government wants that to happen. And they also want maybe Google to open source part of their technology, which, yeah.
This is kind of interesting too, because we're sort of seeing some version of that play out with the TikTok story, which is that, hey, it's the underlying technology, which is really the value here. It's not just the front end of the app. And so it sounds like, that has always been a consideration for Google as well. Very quickly, before we let you go, you're going to be at the courthouse next week as well?
Actually, mercifully, no.
Okay, all right. Well, all right. We're going to be watching
just today. But
Okay.
the trial is going on next week.
So what are you watching for? What should we be, aware of as we see the headlines come out next week?
Yes. I think, we should be paying attention. I'll be there today, and then, that what I think the most interesting thing that comes up in these situations is sort of like what is revealed about like the business that we didn't know any before, because that evidence comes up in court, and sometimes like internal emails come up. I mean, we got Google to confirm, which there have been reports of, that they had considered selling this business, that they're fighting so hard in court not to sell. And we actually learned they considered some other creative alternatives, like moving part of the business into Google Cloud and selling it kind of as a software as a service product, which is a little bit different as to how it's charged now.
Yeah.
So I think it's really interesting to learn just like things we didn't know about Google's business. And then I think we also should be paying attention to, again, how the judge is reacting, who is sort of scoring points with the judge, because ultimately she's going to make the decision as to whether they have to sell this thing. So.
Right. And very quickly, Catherine, just before we let you go, why didn't they end up selling the business when they tried? Did we get any insight there?
Yeah, it's interesting. On the stand, they didn't quite get into any of the rationale. They just sort of talked about a sale
So we tried.
consideration. But there has been some reporting from Bloomberg that part of these efforts, at least the most recent ones, it seems like partly trying to come to an agreement, but maybe there was some with the government with this case, or they've also, have these fights in Europe happening as well. So trying to sort of figure out, how do we get out of this legal battle? And it just seems like the terms, or what they were willing to sell, as I said, not being the full tech stack, wasn't sufficient for the government. So that seems like what some of the reporting around this is. Obviously, it's not our reporting, so don't know fully if it's true. But I think that and it is worth noting that this business sits seemingly on Google's earnings, has been declining. So it kind of would make sense if they just want
the market is changing. I mean, as you said, that's kind of the take home here, is the market is changing, and it's interesting to see the judge acknowledge that and sort of look ahead. Catherine, thank you so much for coming on. Wishing you all the best with the final day of court proceedings today. We'll see you back here in the office next week. That is Catherine Perloff, our advertising reporter at The Information. Okay. If you are a close follower of OpenAI, you probably know the name Mira Murati. She was the former CTO of the company who left last year, and she's now building her own startup, Thinking Machine Labs. The company was last valued at $10 billion, and today, our AI reporter, Stephanie Palazzolo, published an in-depth profile of Mira Murati and how people in her orbit think about her as a leader. Stephanie, it's great to have you. Welcome back to the show.
Thanks. Great to be here.
Okay, so let's talk about Mira Murati. I want to talk about Thinking Machine Labs. There's $10 billion is a big number. We're going to get to that. I just want to rewind a little bit to when Mira Murati left OpenAI, because I think it sets the stage for sort of what she's hoping to do with her new company. Why was it that she left the company? What was the disagreement a year ago that prompted her to sort of say, I'm going to go it on her own?
Yeah, so Mira's departure from OpenAI was very sudden, and I think very unexpected, even to executives at the highest ranking levels at OpenAI. A lot of them didn't even know that she was planning to leave until she announced it, basically. And the reasons behind the departure aren't exactly clear, but we do know that she did play a role in the ouster of Sam Altman that had happened about a year prior. So when the board around that time had reached out to her, she had had multiple conversations with them about, feedback she had and concerns she had around Sam Altman's management style. And we also know that she, very quickly agreed to become the interim CEO after Sam was fired.
Right.
But we do know that, after that whole period, she, very quickly kind of supported Sam. She signed this letter along with, the vast majority of OpenAI saying that they would quit if the board didn't resign and Sam was brought back.
But then she still left. Then she said, after all that, she said, I still don't like it.
Yeah, I think from our reporting, it does seem like there was a lot of bad blood still amongst her and the other execs. People definitely wondered, what role she had in the ouster and whether or not she was kind of pro Sam after that incident happened.
Okay, so she goes it on her own, okay, and it was quite the departure, perhaps the highest profile departure from OpenAI. She's now building this company, Thinking Machine Labs, and the profile that you published today, I should say, it's in our weekend magazine, so everyone should go read it. What exactly do we know about what Thinking Machine Labs is trying to build?
Yeah, so surprisingly, very little. I think this is kind of a common theme with Mira. She's quite a mysterious person in AI, but
Mysterious Mira Murati. Okay.
but we do know that they've told investors they want to come out with an enterprise product and a consumer product. On the enterprise side, they're thinking about creating models that can basically be customized to a business's KPIs, which it's basically a name for a metric that a business tracks to see like how they're doing. On the consumer side, they're thinking about creating an AI assistant that consumers can talk to. But other than that, they've been very in stealth, very quiet. Have basically said nothing about what they want to build, and even some of their own investors that I spoke with are not entirely sure what these products might look like, which is quite unusual.
Right. And I have to read this one paragraph from the story because I think it actually very clearly articulates what you're saying. The passage reads, "It was the most absurd pitch meeting," one investor who met Murati said. She was like, "So we're doing an AI company with the best AI people, but we can't answer any questions." So even the investors are in the dark. My question for you is, I mean, what is it about her that they're so drawn to, besides her history, which obviously being the CTO at OpenAI, you get a lot of great goodwill that comes to that. But what is it about her exactly?
Yeah, so I think it kind of boils down to two things. I think part of it is, as you mentioned, her history at OpenAI, but kind of the reputation that she built there. Many researchers there basically knew her as the quote unquote internal CEO. As Sam was out fundraising and talking with politicians, business leaders, Mira was kind of the boots on the ground at OpenAI, like basically keeping things running well. And lots of researchers feel very positively about her. They really enjoyed working with her, had, really great things to say about her, basically, when investors were doing their diligence. I think the second thing is not about Mira, but about this kind of team that she's been able to assemble around her. As we've seen from obviously the Meta kind of AI talent war, like research talent is everything these days. And so she's managed to assemble kind of this like Avengers of AI a little bit, where you have, people that created ChatGPT, like top safety execs from OpenAI, people that are very knowledgeable on post training, which is this process that happens after the initial training of a model that's become, very important these days. And so I think it's both a combination of Mira herself, but again, kind of this broader group of people that she's managed to kind of bring together for thinking missions.
And just very quickly, how big is the company? Do we know how many people she's assembled?
Yeah, so we don't know the exact number, but it is still fairly small. I would say probably less than 50 or 100 people at this point.
And we should say that this came up in the story. It's a barefoot. It's called the barefoot culture. What, like no shoes policy? Sorry, maybe not bare feet, just no shoes.
Yes, no, it's very like classic Silicon Valley. The all hands people are sprawled out on beanbags. They're doing shoeless culture. Very classic.
Yeah. I don't know if I would go for the barefoot policy. I think no shoes I can maybe get behind. Look, I do want to ask you. You didn't have a chance to speak with Mira Murati for this profile. Of course, we ask the question, and the companies decide whether or not they want to participate. But if you did have an interview with Mira Murati, what questions would you want to ask her?
Yeah. again, with the kind of theme here of Mira being very, very mysterious, she doesn't talk to press very often. I think the one thing that I'm very curious about is it's kind of like a deeper question, which is just, what is kind of driving Mira in all this? What's her kind of religious mission here? I think whenever you look at all these AI startups, the leaders kind of fit into these nice little boxes, little stereotypes where you have Elon who, kind of wants to seek like the truth of the universe. And you have Dario at Anthropic, who's seen as this very, safety focused AI leader who, wants to get to AGI, but is like so concerned with safety and the possibility of AI being very dangerous things. Obviously, you have Sam Altman, who I think
Sam is everything. I wanted everything.
Sam is like a force in himself. He loves the limelight. It talks a lot about AI's potential to cure cancer and all these things. And I feel like Mira, it's not entirely clear kind of like what is driving her to do this. Is she building towards AGI because she wants to cure cancer? Does she mostly just want to build like really incredible products for consumers that like get a lot of consumer love? Like, it's not entirely clear to me kind of what's driving her here, and I would love to talk with her about that. So,
right. Well, what we're going to do is we're going to package this up, okay? We're going to put it in a clip, okay? And then we're going to send it to Mira. Mira, this is our open invitation to come on our show and answer that exact question that Stephanie has, which is that what is driving you, to do all this? Because investors clearly believe it. $10 billion with no product, no revenue. There's a lot of confidence there, and we want to try to unpack it. So, Stephanie, thank you for coming on the show. It's a great profile. I encourage everyone to give it a read. That is Stephanie Palazzolo, our AI reporter at The Information. Okay. We all know that the government is Intel's newest shareholder, but this week we learned from my colleague Steve Levine's reporting that the Trump administration is also talking to some minerals companies about taking stakes in those businesses too. I want to bring on Steve to tell us more about what he knows about these critical minerals companies. Steve, welcome back to the show. It's great to have you.
Thanks, Akash.
Okay, so let's talk the wonderful business of critical minerals. So we understand it, and correct me here. Look, these minerals companies, they are very important for the manufacturing of the batteries that have become so key to the electric vehicles industry. Do I have that right?
Yeah.
Okay. All right. So we've got these companies, and very quickly before we get, what are the minerals? Let's just name the things that we're talking about here.
Well, some of them, nickel, lithium, cobalt.
Okay.
Copper. Yeah.
Great. Okay. So, we have this story here. There's so many different angles we could go with it. How have these minerals companies been doing broadly from a performance perspective? Maybe let's start there, and that might give us a window into understanding why the government is looking to take a stake in them.
Yeah. So where this comes from is that the very, very quickly Biden administration got very heavily behind an EV industry, a battery industry, wanted the U.S. to establish these industries, compete on a global scale against China, which is the dominant player. And so threw a lot of money, over $60 billion behind these companies in grants and loans. When Trump took power in January, he froze all that money. And so until now, these companies, which are startups, the industries aren't really going yet. They've been waiting for this money, and until then, they've been struggling really. Some of them have gone out of business. A lot of them are on life support. And the news right now, why this is important, is that we've learned that the Trump administration is prepared to free up at least some of the money in exchange for the government taking an equity stake in the companies.
And this is something that they've done before, right? The government has taken some stakes in some of these types of companies before.
Not really. I mean,
if
you're talking about prior administrations, there is no history of this, right? I mean, you do have government bailouts. I mean, this has happened in the car industry and steel industry over the decades. But we've always, Americans, stigmatized other countries like Russia, like China and others that put the state behind the company. We call them state-backed companies.
Right.
And that means there's something wrong with them. Why can't they stand on their own? Now the U.S. is doing this. It's quite controversial. Are we looking at a mafia style shakedown,
Right.
or we're seeing in the case of some of the investors, some of the companies look at this as a positive turn. When the news came out a few days ago about Lithium Americas perhaps getting their $2.3 billion loan released, their share price went up 96%
Huh.
in one day. And so there is some debate. There's some confusion about whether this is good or whether it's a negative thing going on.
And more what I was getting at, this company MP Materials was a company that you had written about, and I guess maybe I had jumped too far ahead. So MP Materials, tell us a little bit about what we know and their relationship with the government.
Yeah. So rare earths are not rare, but they've gotten this name, and they're almost all, like 98% of them, are mined and processed in China. These are a critical component in weapons systems, in our military, most advanced military jets, and in the motors that go into EVs.
Right.
The China has put a block on some of the rare earths. So the Trump administration, we need to capture at least some of those metals ourselves, and so offered $400 million to a California company, MP Materials, to help them build out their mine and their processing in exchange for a 15% cut of share of the company.
And so your reporting now shows that those discussions are going even wider, I guess, with a broader set of minerals companies. It looks like. I want to get sort of the big picture here in a second, but a very tactical question: what does the government do with all these stakes? Like, what end does it? I mean, think about venture capital. The venture capitalists look for an exit, right? You invested in a company, you hope that you exit. Is the idea here that they will sell it at some point? Like, what do you end up doing with a stake as the government?
Right. Well, since it's so new and never been done, no one really knows.
No one knows, right?
Right. But one of the conjectures are that all the stakes go into a U.S. sovereign wealth fund, and the U.S. somehow profits from this. The thing is that there's a what's in it for me sort of narrative here, right? Okay, the U.S. is going to give you this loan or a grant. What's in it for the U.S.? The government has always seen these as, well, these companies are going to create jobs. They're going to pay. They're going to pay taxes, and they're going to improve the economy. That's what's in it for you.
Right.
I mean, to your question, I don't know what the answer is. No one knows what the answer is.
Right. And so, last question for you: if we take a step back here, going back to sort of what we were talking about earlier, the performance of these minerals companies and the EV sector more broadly, does this tell us anything about how the EV sector might progress? Is it evidence of a lifeline that wasn't there before? Are they even getting any more cash from any of this in the first place? Like, just talk to me a little bit about how you see this story progressing.
Yeah, it's in the short and the medium term, it's actually a positive development. These companies, most of them are operating on fumes, right? I mean, there's no cash, and they're in this death valley, of waiting for the industry to to really emerge, the EV industry, which may not be until the end of the decade, which means they need 5 years of life. And so here they've got the potential to have a pile of cash, and that can attract more in investment. And we saw this. That's not just notional. Lithium America shares did go up
Did go up, right?
96%. And so,
It helps.
so I would say
Yeah.
it's a positive sign for the companies. But this isn't something imminent. We'll be
Right.
waiting a few years.
Right. Great. Well, Steve, thank you so much for coming on the show. Steve Levine is the author of our electric vehicles newsletter here at The Information. I highly suggest you go check it out. And with that does it for today's show, folks. A reminder that we are live on this stream Monday through Friday at 10 a.m. Pacific, 1 p.m. Eastern. I want to thank Amazon Web Services, who is our presenting sponsor for this production. And I want to thank you for tuning in. We really do appreciate your viewership. I am already excited for our next show on Monday. And so until then, have a great weekend. Bye-bye for now.